Okay, time for another Q&A. I'm doing this one from Costa Rica. And I did bring my microphone this time. However, I have my laptop and my microphone doesn't plug into my laptop. So here I am again, using the laptop microphone. So I hope the sound works. I'm outside. Can you hear all the crickets? You can hear that. Anyways, let's begin. There are not that many questions this week. I think we only have about 50 to get through, so it should be quick. And I'm glad the first question is the first question. Number one, will the Q&A now shift to Discord? How will you handle so many questions? The Q&A will eventually shift to Discord, yes, but not for a couple of months because we got a lot of onboarding to do. We open this up Friday at noon. We've got the first 1,000 in. And you know, when you start onboarding people, you find little technical difficulties here and this technical difficulty, and you got to reprogram your API. And so we've done that. The link to Discord was off the site for 24 hours while we adjusted it. It's back on. So if you log in to your applied series and you go to any video on the right side of your screen, like when you're looking at the video at the screen, there's a little menu here telling you what's new. Right under here, there's the video you're watching. Right under there, it says Join Discord. Click on that. It's a more streamlined process than when we started, and that should get you in. But eventually, yeah, Q&A will shift to Discord. I don't think there'll be that many questions. The thought was that each week we would set up a new market outlook with new questions, and then the next week a new market outlook channel with new questions, so on and so on. So it's not going to be just one long continuous channel. Will there be specific time and place for stream for Q&A and live sessions? Yes, there will. I just haven't gotten to that point. Right now we're getting people in. And we're setting their status, whether they are novice, advanced, or expert. We're verifying credentials and verifying status so we know who everybody is. The last time you said self-help books do not help. Can you state your reason? Reason is very simple. Good advice is only good advice after you need it. I can give you all the good advice in the world, but if you don't have the problem that I'm trying to give you the advice for, you're just going to say, yeah, okay, sure. And then you're going to make the mistakes that I warned you about, and then I'll remind you, and you'll say, why didn't you tell me then? And I'll say, but I did. It's just you didn't have the problem, so you didn't recognize it as good advice. We don't recognize things as good advice until after we needed the advice. Then we say, that would have saved me a lot. Right? So I don't know that self-help books really work. Reading about something is not the same as doing the work. You know, so... Yeah. Do you think we get dependent on these books or on others for advice without relying on ourselves? There you go. That's a good way to think about it. Discord link isn't showing up. Yep. It is now. Applied level A3. Just like you are answering questions now in Q&A, and we get special attention to our questions, whether we ask about finance or advice on life. Will we get the same thing on Discord? Yep. Yes, you will. Someone insulted you in a previous Q&A is laughably wrong. Yeah. And you gave a befitting logical reply to him. You structured your argument, supported your argument with proper logic. I want to know how to gain these debate structuring and support arguments skills. That is what a university career will teach you. It should, if you're at a good school, it should teach you how to structure an argument. What is his opinion on Jeffrey Sachs? I think he's knowledgeable in the fields that he sort of has purview over. I think he's knowledgeable. I don't have any criticism of him. Hang on, Jeffrey Sachs, not David Sachs. Sorry, I was thinking you meant David Sachs. Jeffrey Sachs. I don't think I'm familiar with him. Seems my AL account does not show Discord. It will now. Can a public company buy derivatives of its own shares? Can it buy derivatives of its own shares? I don't know if there's... I think there would be a lot of questions asked as to why that's being done. I think that might even borderline on market manipulation, depending on what they're doing. I think most companies would absolutely avoid doing that kind of stuff. So there probably is a law against that or a rule against that, but it would be a lot of explaining as to why they did something. Is it possible to know when it's the right time to buy the stock and sell? No. Not really, no. Is it impossible? It's not impossible. When we think about the right time to buy and sell, there's no right time. Think about it more as, is it a good time? Right? A good time could mean that somewhere within the time that you're buying, it's the right time. But the right time implies that you bought it at the right price and you sold it at the right price. I don't know that we could say that there's a right price to buy it other than it's a good time to buy or it's a good time to sell. I think that's the best that you can do. Some people predict the share price. Can we predict it or are we making fool? Prediction is just your best guess based on some educated assumptions that you're making. It's your best guess. I don't know that predicting a price makes a lot of sense. I think predicting direction makes more sense. That I think this has the ability to go up, or I think this doesn't. As opposed to coming up with a price target, I think it's all just one big guess. Any unspoken rule, like if a stock goes down 20% or up, should sell or buy? You set your own rules. Whatever you feel comfortable with. I think the 20% down rule makes sense because 20% off a high for any stock means that stock is now in its bear market territory, which will attract momentum sellers to it. Kaplan's question of the day. Which of the following statements regarding securities lending is correct? Typically, the securities lender must physically deliver the securities to the borrower. If you're lending, well, yeah, you can't just say, I'll hold it as collateral. If you're lending shares, it's because the person on the other end probably wants to sell them. So everything is digital now. When we say physically deliver, you're talking about, the ownership will transfer, so that the short seller no longer is the owner of the securities, but is the beneficial owner, but may not be the registered owner of the securities at that point. Does physically have a different meaning in finance? Because clearly securities will not be physically delivered. Yeah, they'll not be physically delivered. When we say physically delivered, it means just a transfer of ownership. Question about free cash flow using EBIT and EBITDA. Well, why don't we avoid, I can see this getting into CFA questions, and I really want to avoid CFA questions because I don't want to step on Serify's toes on anything. I don't want to be, let me just pass on that. Because that's not what this is. Please update us on the valuation part of financial modeling. I'm in Costa Rica for the next 2.5 weeks at this point. When I get back, we begin. Over a period, I think, of 3 or 4 weeks, we'll do the valuation. We have 3 valuation techniques to do, and we'll be good. View on Mara, BT, Bitdeer Hut. I sold some puts on this and now deep underwater. Yeah, because the space is under pressure. Bitcoin broke a key level at 92, kept selling down. Keep in mind, if you're watching my positions video, what I said, I am short MicroStrategy while I'm long on the other side, that I tried to set my exposure very close to zero if possible. Because I don't inherently believe in Bitcoin. I love the volatility, but I don't inherently believe in Bitcoin. But I believe that there's a crowd that believes it, and I'm betting on the crowd. So I use MicroStrategy as my short position, which under $250 today, down from 380. That thing's working beautifully. But they are under pressure because Bitcoin's under pressure. My applied profile doesn't show any Discord. It should now. Some error occurred. Discord, yep. I was short a company that went bankrupt. Placed limit buy order to buy back the shares at a penny. due to lack of liquidity, is filling slowly over a few days. However, consistently filling at 0.0075, with one trade even going as low as 0.0025. Lower than the limit price I set, and I don't understand how this is possible. It's pink sheets, it's OTC, it's, you have somebody that is willing to sell, they want to get out at any price, and, the limit order basically says, I want it filled at this price or better. Think about it that way. It's this price or better, but no worse. So if you have it set for a penny, it won't fill at 1 1/4 pennies, but it can fill better. So it's at that price or better. Let's see. Thoughts on Vance's comment in Munich and Germany's recent. Well, you sort of thought that Germany was going to move more to the right, that they stopped center right, I think is probably a good place for them. Yeah, I don't know that, I think you could have said what J.D. Vance said in a less arrogant way. It came off as rather arrogant, I thought, even though he probably, was saying, what the intentions of the U.S. were, but to lecture other countries to, I don't know, I thought it came off a little arrogant. What would be the best way for a logistics trucking company to hedge their fuel expense in the U.S.? Would it be WTI futures contracts? It's a logistic company heading their fuel, so no, I don't know that I'd use WTI. Why not use, well, they're using diesel. Diesel and gasoline they used to travel in or move in pretty consistent lockstep. You'd have to find the correlation between diesel spot and gas spot, and then use the gas futures to hedge that out, which means you'd be long gas futures. Hearing about gold being revalued, could you explain what that means? It just means that, if you got it on your balance sheet at $100 an ounce, maybe it's time to list it on your balance sheet at $2,900 an ounce. Maybe it's time to just revalue it so that your balance sheet shows the real value of what you're holding. That's all. Surprised you didn't mention anything about ABR in your positions video Friday. Decline of over 13% is a good opportunity to pick up shares. Well, they are going to be cutting their dividend this year. They're going to right-size their dividend to their distributable earnings. 43 cents a dividend. Don't be surprised if that drops down to 25 cents a dividend. And if the market still wants a 12% yield on that, that puts the price at $8.33 a share. At a 10% yield, it puts the price at $10. If they cut the dividend to 25 cents, will the market take an 8% yield on that and price it at $12.50? That's the question: is where is the market going to price it once they know what the dividend is going to be? When I click, okay, that's Discord. A lot of articles about growth stocks, value stocks. They all say that value stocks are statistically proven outperform growth stocks both before and after taxes over longer holding periods, not over the short term. There are periods where growth massively outperforms value, and there are periods where value outperforms growth, but over the long term, value tends to outperform growth. But I don't really understand. When I analyze the market myself and open the charts, I always see upside in a growing company. Yeah. So let me see if I can explain that to you. Let's take just a growth company. We'll take a value company. Might look like that, and we'll take a growth company. All growth companies eventually end, and down they go. Their valuations eventually end. So if I look at over this period of time, value outperform growth. But there are periods of time where growth will outperform value, right? So it depends. But over the long run, value does tend to outperform growth. There's a couple of theories why. One of the theories is when you buy a value company, you just might be buying a value trap, because all companies that are growth companies become value companies before they become bankrupt. The pathway to bankrupt goes through the value neighborhood. So if you're fishing in the value neighborhood, how do you know that that company is a value company, a deep value company, or a dead company walking? Right? They all pass through that. So there's more risk in buying that because it could go to zero. So you have to be compensated more. The other reason you can think of is that they tend to be undervalued more often than growth companies, and growth companies tend to be overvalued more often than value companies. When I buy a stock that has a dividend yield, I'm locked into that dividend yield, holding the company's dividend per share constant. Yeah, if you hold the dividend per share constant, buy a fixed coupon bond, I'm locked in that coupon assuming no default. True. My question is, with bond ETFs, let's say TLT currently yield 4.27. Am I locked into this if I buy today, or does the yield I receive fluctuate as the yield on the ETF fluctuates? As the portfolio of bonds it holds turns over and new bonds come in at different yields, its yield will fluctuate as well. Percentage of portfolio made up of derivatives versus stocks, ETFs, etc. Can't answer that question. It's almost an impossible question to answer. Let me explain why. And let's look at gold futures, for example. Gold futures would cost me $20,000 in margin. I have 100 ounces at $2,900. That's a $290,000 contract, but it only requires $20,000. And I have $100,000 in equity. What percentage of my portfolio is derivatives? Would you say it's 20 over 120, or would you say it's 20 over 390? Or sorry, would you say it's 290 K over 390 K? Because the value of the contract is 290,000, and I have 100,000 in stock. So total notional value of the portfolio is 390,000. Gold represents 290,000, but it only requires a $20,000 margin. So what percentage of my portfolio is derivatives? Is it 20 over 120, or is it 290 over 390? You see how it's impossible to answer that? I wouldn't even know where to begin on answering that. I think the better way to ask is, what percentage of your positions are through derivatives? 80% are through derivatives because of the leverage that you get with it. So to say what percentage, it's an impossible question to answer. What's next on your radar for the applied level besides insurance? I think a deep dive in the labor market series would be interesting. I already did the labor market report. I did the labor market, CPI, and PCE. I already did that in the applied level. After insurance, I think I might spruce up mortgage REITs. And maybe look at MBS in more detail and explain mortgage REITs in a bit more detail. And once I'm done that, the financial sector would be ready to be spun out as a standalone sector for somebody who's only interested in the financial sector. After that, I find maybe something in consumer discretionary or consumer staples, because those sectors are a little bit empty in the subsectors that are there. I know I'm going to be adding to the financial modeling for valuation over the next couple of weeks. I also want to add to financial modeling in finding complex situations. Like, here's a company with a complex debt situation. Let's just model the debt. Here's another one with share-based compensation that's complex. Let's just model that. As opposed to modeling a whole company, let's just model tough cases in a whole bunch of different categories. I think that might be interesting. I don't know, from one project to the next project when I'm done insurance, I think, well, what would be interesting next? And then what would be, it's whatever happens to be interesting. Unless you have some ideas, throw some ideas out. European inflation is going through some large base effect volatility. Large base effect volatility. Okay. Highly likely at the peak, and they are about to drop much lower. I don't know what that means. UK had a big month-over-month January that got removed from year over year, which caused the increase. Okay, well, what was the question here? Where's the question? Therefore, inflation likely to drop harder with the UK. Same story. Oh, that's just a comment. Okay. Does anyone know where I can find the chart for ZQ term structure that is in the first page? I get that off of CME. You can register for free, and it is STIR Analytics. Drop down menu, find short-term interest rate analytics, and you'll get a little chart up like this, and there's a menu on the side. One of them will say FF futures, or FF futures, and you want to click on that little button there. ABR is released. Okay, already talked about that. Okay, let's look at this one. Okay, what does it say? Add to our conversation about ERP from a couple of weeks ago. How would you go about using a built-up method to determine the cost of equity? Due to limited data regarding small to mid-sized firms in Canada, I use a built-up method. It goes like this: risk-free rate, Bank of Canada 10-year. Okay, equity risk premium. How would you think about this? Plus small company premium, plus specific premium. Okay, I see what you're doing here. Right. The first two components, if you add a beta, you got cap M, but you're adding the small company premium, so rather than have the beta, you're using that. How would I think about the equity risk premium? Well, I don't know that I would think much about it. I don't quite understand, I guess, what you're asking me about how I would think about this. Usually, for this kind of thing, you have a data provider who would provide you with an estimate of the ERP based on a longer term bond like a 10-year. Rather than you trying to figure it out yourself, usually your data vendor will have it for you. Will you consider creating a modeling course for commercial banking? I don't know. It would be great to see what Canadian banks are looking for when lending $1 to $250 million to their clients. Specifically, what ratio? That to me sounds like those are two different things. Creating a modeling course for commercial banking, meaning are we modeling a commercial bank, or are we developing a model that a commercial bank would use? If so, each bank has its own, I don't know that I have the experience with commercial banking to get that done, because now that's specific domain knowledge, and that's not just finance knowledge, it's specific domain knowledge. You'd need somebody from the banking industry to sort of get that done. Century Initiative, nope. If you have, what's your opinion on it? Do you think it's a good goal to aim for Canada to hit the 100 million population by the end of the century? Well, wouldn't it? Wouldn't it do that on its own? I mean, that's 75 years away. We're at 40 million now? I don't know that is an unrealistic goal. That's less than 1 million a year, because at 1 million a year, you'd be at 115 million. That's less than 1 million a year. That doesn't sound unrealistic. You'll seem enticing on the capital assets. DFN SBC have only not paid their dividends 4 and 3 times. Okay, I don't know what those are, so I'm just going to keep moving on. I don't know what you mean by enticing on the capital assets. Oh, split cores. Oh, okay, a split corporation. The dividend would be, but the capital gain wouldn't. So what a split corp is, if I can remember this correctly, and I think this is what you're talking about, is you take a stock that's, let's say, $50 that has a 5% yield, and you split it, and you have a $30 stock and a $20 stock, and the $30 stock gets the dividend yield. Well, less, of course, a fee, right? So instead of getting $2.50 on $50, maybe the 50 cents is gone, and this gets $2 on 3. So you get a higher dividend yield, but all the capital gain goes over here. They get no dividend, but the capital gain goes onto the 20, and you're just basically getting almost a fixed rate, but a higher dividend yield on that. So you split the share. One side of it gets the dividend, less, of course, the fee. The other side gets all the capital gain on the split share. Yeah. Because when you're buying this, you might say, well, I'm buying it for the capital gain. Well, then why not just buy the portion that you feel belongs to the capital gain, right? MicroStrategy issuing its first convertible bond of 25, not working out. MicroStrategy is now under $250 at this point. So not really working out, but it is what they want to keep doing. I don't know that I have any opinion on it, other than the bondholders, the convertible bondholders, are not there for the conversion. They don't really want the shares. They're not there for the conversion. They're there for the volatility. And as long as the stock keeps delivering volatility, the convertible bondholders are more than happy. They don't really care if the price goes up or the price goes down, only that it does go up and down and up and down and up and down. That's all they care about. What would, in your opinion, be exciting growth-oriented sectors that you could recommend for somebody wanting to pick a sector, start learning from scratch? Nice sector that I think has good long-term growth and is definitely needed is cybersecurity. Cybersecurity. Would one begin with starting to compare all the tradable companies in the sector? I think you would begin by understanding the economics of the industry and understanding the terminology and the language of the industry. Then you'd start with a small group, usually the biggest companies in that sector, 3 or 4, and you'd get to know them. And then you'd start adding another one here, another one there. I would not start with 20 stocks and trying to compare them all. It's overwhelming. Start with a small group. And once you fully understand them, you're going to slowly expand the number of stocks that you're looking at. But I wouldn't try to do 15 or 20 at one time. Based on financial, would I begin to look at a particular industry group, industry, or sub-industry? It's hard to answer that question because there is no one way to do it. You tell me what you're trying to get done, and I'll tell you which way makes the most sense. But there is no one way to do something. So there is no answer that I think is going to be satisfying for you. Interest tend to go industrials, materials, and information technology. Well, then you should go where your interest is, right? Learn the sub-industry, learn it well, pick the 2 or 3 biggest players, and really get to know the economics of their income statement and balance sheet well. And then you slowly start to expand, and you might expand instead of horizontally into competitors. You might say, well, let's expand our view vertically into suppliers. You might look at that, but I don't know that I can suggest that there is one way to do this. If your app is available for Android, I believe so. I don't work on the app side at all or pay attention to it, so I don't know, but I believe so. Thoughts on buying the S&P 500 at these levels in dollar cost, averaging every month my Roth IRA? That's pretty much what you should do, especially if you have a long-term horizon, like 30 years. Just simply buy the market and have a contribution plan, and every quarter you contribute, and you simply just buy whatever at whatever price it is, But you got to keep in mind, if you're doing that, it's because you have a long-term plan. Don't after 6 months say, oh my God, I'm losing money. Get me out. It's a long-term plan. You have to stick to the long-term plan, which means you have to just ignore what it's doing. Don't try to time the market. Just say, I'm just going to keep buying at regular intervals. Don't let the price push you around. Moving some content to the website. And now also with Discord being live, will you eventually be less active on YouTube? I haven't figured that out yet. I think that so far what I'm seeing from Discord is a lot better conversation going on at this point in time. So here is YouTube, here's the site, and here is Discord. What I'm going to do is YouTube can join Discord, but they must join it through and then to Discord. In other words, you must open a free account on mm.com to be able to click on the link to be able to go to Discord so that we can check your credentials over here. It's the only way to do it. So I will have to send you to mm.com to get a free account at some point so that you can join Discord from YouTube. It's free. It's not like, you can say, oh, he's just trying to get money. It's free. I'm not trying to get money. It's free. And while you're there, the 2018 Level 1 CFA is there. Avail yourself of it. It's free. Let me write that word out in bigger letters so that you know. Why am I doing it this way? Is because if you just show up from here, I don't know who you are. I can't verify that you have a certain level of qualification. Whereas if you go through here and you click on this link, to get in here, our API checks that you're over here. Then you're in a waiting room. And then from that waiting room, I then say, okay, who are you? Right? I know you did it the right way. I know you can follow instructions. Who are you now? And then we go from there. Will I eventually be less active on YouTube? I'm going to put a question there and say, that is a good question. I don't know. I really don't know. Do we need to have Discord login prior to click and join us on Discord? Yeah, that was one of the, when you clicked on it, it had a default of creating an account, but if you already had an account, it created a problem. So we took Discord, the link off, we fixed a few things, and now it's taken care of. If you already have an account, you don't need to create a new account. It won't require you to create a new account. But the safest thing is to have an account before you click on it. It's just the safest thing to do. Create an account and then click on the link. Trump is easy to read. I'm very curious. What did you read of his strategy on Ukraine? What is he trying to accomplish? He's trying to accomplish peace, and he doesn't care how he does it. I can get Ukraine to come to the table, or I can get Russia to come to the table. I don't care. I don't care how I do it. I just want peace. He wants peace because there's nothing in it. I mean, it's more about Europe than it is about the U.S., but he did say he would solve the war. So let's get peace. And if it means handing the Ukraine over to Russia, if Ukraine is just not going along for the ride, he'll make a deal with Russia. He just wants peace, and I don't think it matters how he gets it, because it doesn't affect the U.S. He doesn't want to affect the U.S. I guess he did get a minerals deal out of Ukraine, so it's a matter of, well, if he has a minerals deal out of Ukraine, the U.S. then says, well, now we have reason to ensure the peace. But either way, it's just going to be peace. Ukraine's probably not going to return to its pre-invasion borders, and they're probably not going to be welcomed into NATO, but this might be an alternative, saying, well, if we have investment interest in Ukraine, then we have a vested interest in seeing that it stays that way, at least for the next 4 years, right? Tariffs, if coupled with workers' demand for salary increase, satisfied to offset permanent one-time. What? I read that tariffs, if coupled with workers' demand for salary increase, satisfied to offset permanent one-time increase in inflation, then add reciprocal tariffs do cause an increase in the probability of prolonged higher rate of inflation, and worst case, if consumer demand is curtailed, could lead to okay, I get what you're saying. That if you're going to have a one-time increase in the price level because of inflation, workers are going to say we want more money because of that, which will then be additively inflationary as well. Yeah, I mean, I think when we say that tariffs are not inflationary, I think if you listen to most of the statements, it says tariffs on their own are not inflationary. On their own, it's a one-time change to the price level. So it's not that tariffs will not lead to inflation, it's tariffs on their own are not inflationary. But if the expectation is that it will be inflationary and everyone wants an adjustment because it will be inflationary, it will then be inflationary. So that is expectations of inflation creating the very inflation you expected. I regard your opinion very highly. I wonder if you could give me your thoughts on this scenario. Yep. How would you protect your portfolio? Usually, if you're long equities, you are inflation protected because inflation is a general rise in the price level. Who's raising prices? Companies. And when they raise prices, what happens to revenues? Revenues increase, right? I have a question regarding your opinion on a wealth tax. Right away, stop right there. I don't agree with a wealth tax. If I made $1 and I paid my 50 cents tax and I got 50 cents left, don't come back to me next year and ask for more money. I've already paid my tax. I don't care how successful I am. I've already paid my tax. You have my opinion on a wealth tax. I don't agree with it. I don't agree with it. Do you think more strict inheritance gift tax would be appropriate? Nope. You mentioned in Moving Costa Rica series about how unfair a wealth tax is on people who built their wealth from the ground up. Yep. But people who just inherit massive sums of money don't really have to work for it. So what? So what? Let's say that you're very successful and you have kids. Are you saying that you want a government rule in place that says you cannot provide for your kids? That all of that money that you built and that you paid tax on, you are perfectly okay with the government stepping in and saying, no, you can't just give it to who you want. Your kids work for it. Tough shit, and they take it from you. Is that what you want? No. You've already paid tax on it. That was the deal. Don't come back and tax it again and again and again. No, I don't agree with that. I just don't agree with that. It doesn't matter if the kids didn't earn it. You did. You earned it. Are you not free to do what you want with your own money? If you want to give it to your neighbor, would you expect your neighbor to be taxed? No. And besides, even if you did, here's what would happen. In a heartbeat, this is what would happen. Let's say you put a big tax on wealth transfer. What are people going to do? They're going to buy life insurance. Why? Because when you buy life insurance, the money belongs to the insurance company, and then the payout goes to the people that you want to give it to. This bypasses probate, and this bypasses tax, right? So life insurance industry would boom. It would simply just boom. So you'd put a rule in place that can be easily bypassed. And if that's the case, why put the rule in place? Why even put the rule in place? I don't agree with a wealth tax. Not for countries where you have economic and social mobility. I don't agree with it. Make it simple, it would be the assumption that money gain does directly even spread to all. Why should it evenly spread to all citizens? Into a 401k type situation, affected people have a 10-year, no, okay, you're leaning towards a socialist solution to a lack of success. If you want me on board a wealth tax, you must demonstrate to me that the system is corrupt and keeps people down. That is not the case in North America, that is not the case in Canada, that is not the case in the US. If you find an unsuccessful person in North America, I guarantee you that before you can blame the system, you must first eliminate personal choice. I guarantee you won't get much past personal choice and go, well, hang on a second. It looks like this person is here through their own fault. Most of the time, high 90s, that is the case. So no, I don't agree with taking successful people's money and saying we're going to give it to unsuccessful people, because a high correlation to that statement is we're going to take it from hardworking people and give it to lazy people. How does that sound? Now, there is a high correlation between success and hard work and between lack of success and laziness. There is a high correlation between that. It's not deterministic, but it's highly correlated. Difference between buying $100,000 in gold versus buying physical gold. Oh, GLD? Nothing. Nothing except you don't have to manage physical gold inventory. ZQ, TLT, IWM had a good week so far. Even had a good day today so far. TLT had a beautiful day. ZQ had a beautiful day today. Opinion of PK. No idea. So I'm going to pass on that. I don't know anything about them. Predictions for the state of the U.S. and world will be by the end of Trump's 4 years. No idea. Not a clue. Not a freaking clue. I have no prediction on that. Honestly, I can't tell you what the state of affairs will be in a week. I will say that it's going to be a bumpy, volatile ride, but I have no idea what it's going to look like. None at all. Trump said during an executive order signing that he won't do anything April 1st because he's superstitious. Oh, so that's why it's April 2nd. Content analysis are great. Trump political demagoguery isn't appreciated. Demagoguery? Clown show comment. That's not demagoguery. That's not demagoguery. Maybe you want to look up that word. If I said Trump is a fascist cult leader, that's demagoguery. If I just call him a clown, that's just an observation. I mean, you don't have to agree with it, but when you put on that much orange makeup and act like that, you're a clown, right? It's a clown show. Yeah. Constant ranting on the same rant on Trump. Everyone knows he postures and rants. Yep. Just started going through your 2,000 free content. Okay, I'll answer that. He wouldn't hurt Canada with 25% tariffs. He would utterly destroy Canada. Yep. Would be interested to hear your opinion on Capri. It keeps selling off. Yeah, it's any Canadian apartment REIT with a heavier exposure to Ontario, which is the manufacturing province, is going to be under some pressure. Simply because you got to get past the tariff threat. Once you're past that, then we can get past the recession fear. Because in a recession fear, occupancy tends to decline, vacancy rates go up, and then of course you have some people who lose their jobs, who are unable to pay their rent. That's sort of a fear going on right now. And that's it.